this just in, and what it means for you. So I've got a lot of requests to analyze this stock. This stock is in the maritime industry, and the stock moved down big time today, and it's out there possibly because of a short squeeze or not. The data, I'm not sure, actually supports that theory. So stick with me, and I'll help us make heads or tails of the situation. Hello everybody, this is Glenn Tompkins from VectorVest, Senior Instructor here. And before we get started, I always want to say, if you're a subscriber to the channel, thank you for doing that. If you like the video, hit the like button. If you're not a subscriber to the channel and you like the content, think about it. If your subscribe button is red, hit it, become a subscriber to the channel, and I want you guys to share these videos with people in your social circles to let them know what we're doing over here at VectorVest. But once again, if you haven't already, smash that like button. All right, so let's get into it. Right now, we're going to cover a story that just came out about Castor Maritime, ticker symbol CTRM. Now, as I look at this, the story tells us that this could be a possible Reddit short squeeze coming after the stock. But normally when that happens, the stock's price goes up before anything else happens. But this stock is going down. So let's go take a look at the news that I have on the stock. And here we go. Oh, I got to move my screen too, don't I? Yes, I do. All right, here we go. Castor Maritime, and I got this story on Seeking Alpha. Squeeze will sink under a wave of share issuance. So as I read the story, Castor Maritime, a minor shipping company, appears to be a current target of the Reddit/Wall Street Bets investors. Now, normally, as I said, when that happens, the stock's price will explode up before anything happens on the short squeeze, and whatever happens, happens. I'm not getting into the politics behind that. Apparently, though, large short interest is offset by outstanding warrants and planned issuance. I'm going to talk about that planned issuance in a second. Many short investors are likely already hedged. So it talks about a little bit about the company, a Marshall's Island company headquartered in Cyprus, listed in 2018, proud owner of a single vessel at that time, raising $7.6 million. Its book value at the time was approximately $8.5 million with negligible leverage. It now owns 6, I believe it's 7 now, relatively old age ships, bulk carriers, and unaudited 9/30/2020 financials show a book value of $53 million with $37 million in cash. It's hard to sometimes just read and do these videos. 31.2 million of vessel and 20.9 million in debt liabilities. All right, so let's scroll down. It says the answer is simple. This is one of the latest targets of the Reddit Wall Street Bet investors. The people who went after GameStop and AMC. The CRT army on Reddit is close to 10,000. I think it's closer to 10 million people. And as I write this, the person that did this, it's the 24th most popular stock on Robinhood. This is what caused the radical share movements in the past week. So as I scroll down in here a little bit, it talks about Reddit and Castor Maritime, and it shows the share count and share issuance. Now, this is where it gets a little wonky. That's the technical term, wonky. Looking at Market Beat, this is a snippet from there. It shows that the percentage, there it is, percentage of shares sorted, 1,486%. That's huge. And you know something? The Wall Street Reddit people would go, Wall Street Bets, Reddit people would thrive and jump all over that stock, hopefully to go after the hedge funds that are shorting it that much. That's a lot of shorting. And it says here, that short interest is definitely a number that makes Wall Street Bets salivate, but it's wrong. They are comparing to the pre-2019 share flow to outstanding short interest reported by NASDAQ on 1/29 of 2021. In a relatively unknown company such as this, the risks on relying on automated market data from public websites are obvious. Interesting. So I did some of my own work. I went out to Yahoo Finance and I looked. Share statistics. I went down and it showed what the float was held by insiders, so on and so forth. But the short percentage of shares outstanding as of January 29th of 2021 was only sitting at 7%. Now I'm getting a mixture in difference in the data that I'm seeing between these two things. So I said to myself, what's going on? Now, remember I talked to you just a few seconds ago about share issuance? Well, the company did something called an F3 filing, and this is what it looks like. They are going out to purchase 700 million shares, common shares, preferred shares, purchase rights, preferred shares, debt securities, warrants, purchasing contracts, rights, and units. They're getting 700 million shares, and from what I've read, about 466 million is going to be issued out for people to buy. So what it sounds like to me is that they're buying shares so that they can grow their business along the way. So I'm not sure about a short squeeze from the story itself or from that little snippet that you saw on Market Beats. So again, with the conflicting data, I'm like, the company looks like it's trying to do the right things to grow their business. All right, so that's what I've got from the news side of it. Let's go out to the software, and now let's go take a look at the stock. All right, from the stock perspective, stock is currently trading at $1.14 with a value of 74 cents. The stock is clearly overvalued, as you will find a lot of stocks in the market are right now. Why? Because there's so much money in the market. Nobody's keeping money in the banks because they're not getting any interest. So the money is not making money there. Money goes where money grows, and the money is growing in the stock market. Let's look at analysis on VectorVest. The stock's upside potential right now below the value on 1, cast on a scale between 0 and 2. Right now, it's not poised to outperform a AAA corporate bond over the next 1 to 3 years. Relative safety. This stock does bring about some level of lack of safety. With relative safety below the value of 1 on that scale between 0 and 2, the stock is a little bit more risky. And third, the stock right now has got an RT, or short-term price trend, below the value of 1. The stock's not in an uptrend. Now, a couple of things that I do like about the stock and what makes the stock move: earnings. The stock does have positive earnings of 3 cents, and they grow their earnings at a clip of 22% a year. So let me give you some stats. The stock is only up 16% over the last year. They do have 7 institutionals holding the stock, so there is some institutional backing, not as much as some of the other stocks that I've talked about recently, but there are some institutions holding the stock. It's got an average volume of 163 million shares a day, so the stock is definitely liquid. Over the last year, it's had a high of about $2.60. So it's not like it's outside of its normal range of high or low right now. With the money that they are taking in by putting out issuance of more shares of stock, they're going to buy 2 more vessels, growing their fleet from 7 ships to 9. And again, as I talked about the issuance of buying 700 million shares of stock, again, about 466 million of it is going to be going out for people to buy. So they're putting stocks out there from a demand, from a supply perspective. People can buy, people buy, the company grows. I'm not sure where the short squeeze actually comes in at this point. So let's go take this a step further. Let's go right-click. Let's view the stock graph, and let's analyze it the only way VectorVest can. I'm going to look at a 1-month graph. The short squeeze move, retail investor move, that's what what they say is going on right now. But as I look at the stock is currently coming off of its most recent high. The 3 and the 8 are still positive, but both curling over. I do have a LITS, or a line in the sand, sitting at 76 cents. I think that with everything that's going on with the company, with the issuance of the stock, with taking that money and buying more ships, the stock or the company is setting itself up to do better. So if you own the stock, I would wait to see if it can bounce off that line in the sand. If you're thinking about buying it now, I would rather you wait until the stock gives you a sign that it's moving back up instead of trying to catch a falling knife. Everybody wants to buy low and sell high, but let the trade come to you. Don't force the trade, all right? So keeping all of that in mind, it's just interesting that it's stating that it's a Reddit move, that it's a short squeeze. I cannot find signs of a short squeeze based on the data that I have to present for you. Now, knowing that this is more of a developing story, as time goes along, I will probably do a follow-up as I get more information. But as of right now, this is what I have, and this is what I'm presenting to you. If you're going to buy the stock, based on information that I gave you, let the trade come to you. Don't try to catch a falling knife, all right? So if you like the content, remember, folks, hit the subscribe button, support the channel, share this video out there with other people. A lot of people are looking at this stock right now, and hopefully this information has brought some things to light to help you to make a better decision. Keep in mind, if you're interested in getting a full stock analysis on any of the stocks that you own, look in the description. There's a link in there for a free stock analysis report. So until the next time, folks, see ya.